Hello and welcome to another Webinar Wednesday by Smartkarma. I'm Michael Tegos. Today, I'm very happy to welcome Ankit Agrawal, who will discuss his forecasting model for identifying Asian companies that are likely to raise or cut buybacks. Ankit has written an extensive Smartkarma original insight in this regard, and you can access the model's live dashboard yourself. So do check that out if you're a subscriber on Smartkarma. Ankit is the founder and CIO of Yellowstone Equity, a firm providing unbiased and independent research on Indian equities. He focuses on equity bottom-up and forensic accounting, and his investment research experience spans across asset classes and geographies, acquired at such firms as InvestCorp and Howe and Rosling. Ankit, thank you very much for being with us today. Over to you for your presentation.
Thank you, Michael. Hello, everyone. Thank you for taking the time out for today's webinar. So since Michael has already introduced me, let me just hit it off the ground. Let me get some of the disclaimers and disclosures out of the way. I'm a SEBI registered research analyst. I have no positions in any of the companies that we'll be discussing in today's presentation. So just be mindful of that. Let me just quickly hash out the agenda here. So I'll be briefly discussing the philosophy and approach behind our models, the universe that we have used. I'll give a quick overview of the live dashboard, and then we can dive deeper into each of our buyback raise and buyback cut models. So one of the things, whenever we start designing our quantitative model, one of the things we keep in mind is we always approach it from a first principles and fundamental perspective, so that we don't get creep-in data fitting biases into our models. So even for this model, we started with very fundamental approach. What kind of parameters will affect whether the decision of a company making a buyback or cutting buyback. So that's the first principle that we've used. Another goal that we kept in mind for this model was we wanted to maximize the hit rate for our model, because the idea behind this model is to provide a fertile hunting ground for finding potential buyback growth and buyback cut candidates. So we have tried to focus more on reducing type 1 errors, that is reducing false positives, rather than focus on finding ideas where the buyback growth or buyback cut could be the maximum in terms of magnitude. So those are the two overarching principles behind our approach. Another thing that is worth highlighting and that is differentiated about our models is we have used separate models for buyback raise and buyback cut, because just like with long ideas and short ideas, there are certain nuances that are quite different for both of those camps. We think it's similar for buyback raise and buyback cut candidates, so that's why we used two different models. And for the buyback raise model, we use about 7 parameters across balance sheet, fundamentals, and historical buyback patterns to design our model. And we use longer term data like 5 to 7 years historical data to give a good grounding to our approach. For the buyback cut model, the buyback cut model is relatively simpler. It uses only 2 parameters. One is the historical buyback pattern and the cash growth parameters. But we vary the thresholds here to grade our conviction level and help us get a good opportunity set for buyback cuts. So that's just general overview about the models. Coming to the universe, we have restricted ourselves to Asia, and we have further applied liquidity and size filters. Like for market cap, we have applied a minimum threshold of $5 billion, and for daily liquidity, we need at least $5 billion, so as to narrow down the universe to more actionable ideas. And this yields us about 920 plus companies, of which about 400 companies are in developed Asia and rest are in emerging Asia. So pretty healthy mix across various countries in Asia, although dominated by China and Japan majorly. So this is the live dashboard that we have created. So this is just a snapshot of it. But in our insight, we have provided the link. So anybody with the link can access this dashboard and see the results of our models. There are 3 pages to the live dashboard. So this is the first page, which talks about candidates for buyback raise. we have a second page which highlights the candidates for buyback cut. And then there is the third page which talks about a buyback timing analysis, which will come to which we'll discuss later in the presentation. So it's pretty simple and easy to use. At the top, there is a filter for region through which one can personalize the dashboard as per the requirement. All right. So with that, let us now move deeper into the models. So starting with the buyback raise model. So for the model design, I think first of all, what we do is we screen the universe to include only those companies that have done share repurchases in the past. This is because our analysis suggests that predictability around buyback raise or cut is meaningful only where companies have had some share repurchases in the past, even if they are not for buybacks, but could be for other reasons like buying for employees' trust or other reasons. So I think that is a peculiar filter that we have, but it significantly boosts the predictability and it doesn't narrow down the universe significantly. So that is our overarching filter that we have used for both our models. After that, what we do is we then apply a whole host of different parameters, and those selection of those parameters is based on the philosophy that buybacks tend to be sporadic in nature. They're not like dividends. They are not consistent. They're not regular. They are very sporadic, and they depend on parameters like what is the excess cash on the balance sheet, how fast is the cash growing, is there excess cash generation relative to the growth opportunities, are there any, and then on the other side, what are the uses of cash, what is in competition to buy back for the use of that cash. So some of those competitive uses could be like acquisitions, or it could be dividend payout, or capex for growth, right? So we have tried to think about those aspects and have tried to include parameters accordingly. So we definitely have the cash parameters, cash as a percentage of market cap, to determine whether there is excess cash on the balance sheet or not. We have included a cash growth parameter to understand whether the cash is growing or not. We to identify competing uses of cash like acquisitions, we have used goodwill over total assets to identify whether a company has been acquisitive in the past or not. On the dividends, we have used dividend payout parameter for companies where we want to see whether the company can fund its growth itself and create excess cash. We have used ROE versus long-term revenue growth parameters to understand whether the company can self-fund its growth, or does it have to rely on external capital. And then we have also used some more peculiar parameters like long-term revenue growth below a certain threshold to weed out some very high growth companies. That's basically the philosophy driving the selection of parameters. And then we have, based on our backtest insights, used the thresholds appropriately to come up with this multi-stage filtration model, where initially we start with a combination of couple of parameters, then we keep adding more parameters, and to drive our conviction level. So one of the, like, some of the differentiating aspects are we use this parameters like goodwill over total assets to identify whether the company is acquisition driven or not. For dividend payouts, ideally dividend, one would think that dividend is a competing use of cash. So a company paying dividends might not go for buyback. But based on our analysis, we have concluded that dividends are not actually competing uses of cash versus buyback, but they in fact signal that the company itself has a good capital return discipline. And if there is a high dividend payout, it usually helps in predicting whether the company will do high buybacks or not. So a high dividend payout is preferable. So those are some nuances and interesting insights that we have incorporated into this model, which has helped us lead to good results. So before I talk about my backtest results, let me just quickly also talk about the scoring and ranking process. So we use two types of scoring. We use absolute score and we use relative score. For absolute score, we pass the model through filtration for all these multiple stages of filtration, and each advanced stage of filtration leads to an incremental score of 1. So any company passing the stage 1 gets a score of 1, and then as it goes about multiple stages, it gets an incremental score of 1. For the relative score, we have used cumulative buyback over the past 5 years. So any share repurchases over the past 5 years, what is the quantum of that in relative to the average market cap? And we then rank those companies based on this parameter. And higher up the rank means that you have done higher buybacks in the past. And if that is the case, then usually the future buybacks tend to be lower in terms of magnitude. So the buyback growth tends to be lower. So higher the past buybacks, lower the future buyback growth. So we have punished those companies where the buybacks have been higher, and so their score would be lower and they would have a lower conviction in our model. The absolute score, obviously, any score above 3 and 4 is high conviction, and we'll talk about the hit rates from our backtest analysis to show why we have high conviction on stage 3 and stage 4 companies. So let me then move to backtest results. So as can be seen, like for our high conviction companies, like for the absolute score 4, we have a 87% plus hit rate. So in our backtest results, we projected about 31 companies to raise their dividend buybacks, and 27 of them actually raised. So that gave us 87 plus percent hit rate. And even for absolute score of 3, we get 80% plus hit rate. So that leads us to high conviction classification for this. And even for like lower absolute score like 1, we get 60 plus hit rate, which is reasonable. And as I alluded to earlier, like we don't focus too much on the magnitude of growth. But even if you look at the jump in buyback in the last column, as you can see, like all of these have seen good jumps in their buyback. So even for absolute score of 3 and 4, on average, the buybacks have jumped by 9 times relative to the past 5 years. So over the next 5 years, their buyback quantum jumped 9 times over the last versus the last 5 years. So it's a pretty healthy jump even in terms of magnitude. So this is just the correlation analysis that shows that when you arrange the future buybacks, when you rank the future buybacks in descending order and the historical buybacks in ascending order, there is a positive correlation. So lower the historical buybacks, higher the future buybacks. So that's how we have used this relative. That's what we have used for the relative scoring. And what is interesting is that even the regression on this comes out to be very statistically significant for the 95% confidence band. So that gives further confidence to our analysis. In terms of forecasted results based on our model, we obtained 42 companies with high conviction score. So 46 companies with 3 plus absolute score. And as can be seen, most of the filtered results, high conviction names, are dominated by China and Japan, which is not a big surprise because even the universe is dominated by China and Japan. So they are gonna show higher representation proportionately as well. So that's the forecasted results. And then just within those results, our top 5 picks based on the absolute score and the relative score are this. So as can be seen, like this is a good mix in terms of country representation and sector representation. And if we look at some of the commonalities among these 5 names, we notice that each of them have had minuscule share repurchases in the past, none of which were buybacks. And this is interesting because like when we run the backtest analysis, what we noticed is that about 50% of our high conviction, 50% of companies where the absolute score came out very high, they had some share repurchases, but those were not for buybacks and those were minuscule. But those were the companies that showed the most exponential jump in the buybacks. So it's the same thing for our top 5 picks as well. And the cash levels as percentage of average market cap for these companies are pretty healthy. They are all in the 10 to 20% range, and in some cases even higher than 50%. Also, the goodwill is less than 5% in most of them, which suggests that these companies have not been very acquisition driven, or at least they've been very conservative when acquiring companies. The dividend payout in each of them has been 25% plus. and the median ROEs have exceeded long-term growth, which means they have been self-funding their growth. And even the long-term revenue growth is not very high. It's less than 8% for most of them. So these are not very high growth companies, which mean they can afford to return capital through buybacks. Okay, now moving on to the buyback cut model. Again, I think the overarching filter of cumulative buyback greater than 0% applies. Here, we didn't have to use some of the other parameters that have been used for buyback raise model because we found that they were creating noise but weren't contributing to the signals. And the thing is, philosophically and fundamentally, it makes sense because buybacks, as I said, are sporadic and you don't do it regularly. And if in the history, in the past, you have done a lot of buyback, then the likelihood that you'll do future buybacks will decrease. So the obvious parameter is the historical buyback, and that is what we have used as well. And we have just kept on raising the thresholds across the stages so that it becomes more and more stringent and our conviction rate improves. And then at the very last, we have added a new parameter like the cash growth, because if cash is declining, most companies would feel nervous in raising buybacks. So that's an additional parameter that I added, but it's a pretty simplistic model from that perspective. And and again, the scoring and ranking is pretty much similar. It's just that the higher the relative score, which means higher the past buybacks, higher our conviction that the magnitude of cut would be more than the peers. So that is the only distinction. But otherwise, the analysis is pretty much the same. I think for the backtest results, I'll show that the correlations and everything come out pretty similar, even though the companies that we have used for the backtest results here are different, but the correlation analysis and all come same. So just moving on to the backtest results, then here the hit rates we get for the high conviction names is 94% plus. And for this companies for the companies with absolute score 3 and above, the buybacks have declined by 1/3 over next 5 years versus last 5 years. So pretty strong results across hit rate and magnitude of cut of the buyback. As I alluded to, the correlation comes out to be pretty similar, and there is an inverse correlation between growth in future buyback and historical buyback. In terms of forecasted results, we get a total of 187 companies that pass our filters, and of this, the high conviction companies, that is companies with score of 3 and above, are about 55. Here, the results are dominated by Japan with about 74% representation, followed by China. So that's just a quick overview of the results. And then within those results, our top 5 picks is our 4 Japanese companies and 1 South Korean company. In terms of sector mix, it is pretty well distributed. And if you look at commonalities across this 5 companies, one would notice that all of these companies have had very high cumulative buybacks of 20% plus as percentage of market cap. So pretty high number. And even the decline in cash has been pretty steep at more than 20% for all of them. So that's the buyback cut model. We have also conducted an analysis on buyback timing so that users can also incorporate the buyback timing track record when making their investment decisions. So we have tried to identify companies which have had good track record. And what we have done is like we have taken the past 5 announced buyback transactions, and of these, the transactions that have closed, we have tried to see how have the prices moved since the announcement. So and the 1 month, 3 month, 6 month, 1 year, and 3 year columns that you see here, they are nothing but average of price performance over these 5 buyback transactions since the announcement. So based on your horizon, and you can sort the companies here by the horizon that you think is most appropriate to determine the buyback track record, and determine which companies have had good buyback timing. we have sorted it by 1 year and 3 months. So one can see that some of these companies like Komatsu, Godrej Consumer, etc., they have a pretty good timing for their buybacks. And then just talking about some of the risks and limitations of our models. As I said, like our focus has been on finding maximizing hit rate. So our focus has been on conviction than the magnitude of buyback growth and cut. So please bear in mind that aspect of the model. Nonetheless, our models, the high conviction names, report pretty high amount of buyback growth and cut. So it's good that coincidentally both the conviction as well as the magnitude go hand in hand, but just be mindful of that. Also, while the backtest results are good, the usual disclaimer is past strong results do not necessarily indicate strong future results. So please be mindful of that. Nonetheless, because of our first principles approach and fundamental driven approach, we think the models are quite robust and have multiple use cases. It can be also used by quant managers who are more interested in basket based approach, and at the same time it can be also used by fundamental managers who might want a filtered universe for further deep dive analysis for buyback growth and buyback cut opportunities. So, and then we have used relative score based ranking, but for the buyback cut model, while the correlations are conducive, we did not find statistical significance as opposed to the buyback raise model, where we were able to find both the correlation and statistical significance as well. So please be mindful of that. Nonetheless, I think fundamentally companies that have done high quantum of buyback in the past is less likely to do future buybacks. So that fundamentally that principle works, but mathematically that is a caveat that one should keep in mind. In terms of data limitations, we have used share repurchase data and not buyback data. So keep that in mind. But I mean, that is the overarching filter that we have used, that we need to have at least some share repurchase in the past. But as I mentioned, like that filter works really well. And even in the backtest results, the companies where there was no non-zero minuscule buybacks showed the most exponential growth in future buybacks. So I think that parameter coupled with other more fundamentally driven parameters gives the model a pretty robust standing. And also we have used averages for calculation of our parameters to counter any seasonality and cyclicality impact. But averages have a downside in the sense that sometimes they could be too skewed by some outlier one-off data points. So just be mindful of that as well. And then we'll be doing periodic updates for our models. So we'll be doing quarterly updates, and we'll be publishing the every quarterly the updated results through the same live dashboard link. But note that we don't incorporate mid-year data. We take only full year fiscal year data. So whenever we publish for the next quarter, like let's say when we publish, not all companies might have updated full year data. So those for those companies will still rely on the full year fiscal data from the past. So just be mindful of that as well. All right. So I think with that, I'm at the end of my prepared remarks. Thank you so much for listening to me patiently, and happy to take any questions.
Thank you very much for this very thorough look, Ankit. I wanted to check, you mentioned as one of your criteria companies that have had at least some share repurchase history. Can you elaborate on that a bit? And where do companies that have no share repurchase history fit in?
Right. No, that's a great question and a good observation. I think so. This is a peculiar filter. I didn't expect it to originally use it, and it is something that I came across when I was running the backtest analysis. What happens is when I apply these filters, my universe narrows down to about 350 to 400 companies. So when I ran my model on this part of the universe, the results came out encouraging because I think there is an element of past buyback history. Like if a company has done some past buybacks in the past or some share repurchases, I think they are already warmed up in terms of doing buybacks, or at least they have a capital return discipline. So I think applying this filter helps in filtering out the companies where the predictability could go high. But at the same time, like, I also tried running my model on companies where there was no share repurchase history, because there were so many other fundamental parameters I had. So I tried a lot of trial and error for those parameters to apply to companies where there is no share repurchase history. But the predictability was pretty poor. Like, every time I would get hit rates of maximum 55-60%. So I couldn't figure out a way to model the rest of the universe. So but I was still happy with the overall results, because I was still working on a narrowed universe of 300-400 companies, which was wide enough for me to pick 50 to 100 companies, 50 to 100 high conviction companies. So that's why I went ahead with it.
Got it. Thank you for that. The model is very heavily focused on Asia, of course, but could it be applied to other regions? And would the methodology need to change at all?
So yeah, initially I focused on Asia, but given the fundamentals, given the same fundamentals would apply to any company anywhere in the world, I would guess the model would extend to other regions as well. Maybe based on backtest analysis, we may we may want to incorporate some nuances here and there, but I feel broadly the model should work as it is. And in fact, in our past models, like the forensic analysis model, we have successfully extended the model to other regions, and they worked well. So I'm guessing it would work. It would be the same for this one as well. And hopefully in future we'll plan to extend the model to other regions as well.
I see. Thanks. And attendee asks, which are the main bourses that the model covers? And does the model show also how the share price performed or will perform during the buyback period?
Right. So there are about 13 countries across developed Asia and emerging Asia, which we have listed out in our universe slide. So all these are included. So wherever the primary listing and the primary office, as long as the primary listing and primary offices are in this regions, we have included those companies in our universe. And in terms of your second part of the question about the price analysis, I have, while I was running the models, I was simultaneously also doing price analysis to see whether there is a favorable correlation between buyback growth and price as well. I don't have a formalized analysis for that, but there is definitely a favorable correlation between the two. And maybe in the next update, we will probably do a more formalized analysis and put it out.
Understood. A follow-up question is, does the model also show the duration of each past or projected buybacks?
No, not at this point. I think we have relied on last 5-year buyback, and also for backtest analysis, we have included only next 5-year buyback. But we don't have duration metrics. Maybe we can think about incorporating that as well in our analysis.
Mm-hmm. Yes, and as you mentioned, you will keep updating the model in the coming months. So subscribers should definitely keep an eye out for that and for more insights to come from Ankit. In the meantime, Ankit, thank you very much for this presentation and for answering our questions. Please note that Ankit is available for bespoke research requests or premium services. So please contact your Smartkarma account manager in this regard. And you can find more details on those ideas presented today in Ankit's insights on Smartkarma. If you have any other questions or comments, please email us at research@smartkarma.com. Ankit, thank you very much once again.
Thank you, Michael, and thank you everyone for joining today's webinar.